Very good, everyone. Let's get started with our lesson, and this is one of those where we show that not everything is a bed of roses. That's right, we often get things right, as you can see here, but at times we end up with losses, just like any other business. It's not like you're going to open a business and every sale you make for the rest of your business's life will be profitable. If only it were like that. Your business would never stop growing, right? You'd become ultra-trillionaire if every product you bought and sold made a profit. You'd be a trillionaire in no time. So here we are, just like any other business, with purchases and sales that make a profit and purchases and sales that result in losses. And what is our role? It's to balance our gains and losses so that it grows in a healthy way over time, okay? So it's the same situation. One very important point to mention here is that this is not an investment recommendation. This is just educational content. This trade has already happened. There's nothing more to be done. In other words, we record with a delay of even a few months so as not to interfere with market movements. None at all. Everything is 100% as the law requires us to do, okay? So awesome. What's happening here? We're talking about Nasdaq, yes. The Nasdaq stock exchange, right? So Nasdaq has its shares listed on the stock exchange, and look at what a powerful company it is, right? Guys, it's a company that just keeps going up. Basically, it never stops. In the last 10 years, it's gone up more than 500%, right? So it has a lot of power. But in these upward movements, you saw here that there are opportunities that it makes a correction. And these corrections end up being quick drops. Look how interesting, 25% in 18 weeks. That's quite a profit, right? So we're going to look for moments like this one. Look at this, 12% in 4 weeks. We look for moments like this to take advantage and do what's called a short sale operation. What is that? It's selling a stock that we don't have in our portfolio, buying it back cheaper later and keeping the profit difference. Once again, going back to the business analogy, I sold a product that I don't have in stock and I'm going to tell my customer, look, I'll need a few weeks to deliver this product to you. That's normal. Let's say you own an iPhone store. You ran out of iPhones, but someone wants to buy one and you guarantee you'll deliver it in a few weeks. So you sold it for $85 in our example. Here, we're going to look for a cheaper supplier, $80, $75, buy it, deliver it to our customer, and that difference becomes our commercial profit. All right. So basically, what do we have here? We have this distinct possibility of a drop, and here there's a strong selling pressure with many people actively selling their shares. And we identified that it could potentially drop by around 10%. Once again, we don't get them all right, and we're very transparent in showing what worked and what didn't. So basically, here we have this move that we made. The sale at 85.49, and what happens then? If by any chance this trade didn't work out, we already knew how much we could lose. Since there was a risk here of $8.40, and I'm going to sell the number of shares that, multiplying by $8.40, I know how much I'm going to lose. So if I sell one share and I have to buy it back at a higher price tomorrow, I'm going to lose $8.40. If I sell 10 shares, I'm going to lose $84. This is predetermined even before you click the mouse. So here we have this opportunity. Here's the big question, folks. We sold. It didn't work out for 2, 4, 5, 6 weeks. We buy it back for $8.40. Going back to the store story, you know what it is? Look, I sold the iPhone for $1,000. Then I went to the supplier and the supplier said, man, it arrived, but it's not the same price as before. I'm going to have to sell it to you for $1,100. But man, I sold it for $1,000. Yeah, unfortunately, I can only... So you're going to buy it for $1,100 to serve your customer and take that $100 loss. It's the same thing here. So we bought back a stock at a higher price to deliver to the client we sold to, and we took the loss. What loss is that, Gustavo? Well, I said the risk was already limited from the start, right? So I sold 280 shares at 85.49, so that was an investment of 23,937.20 here, okay? And those 280 shares gave me a loss of $8.40 each. In other words, a loss of $2,352. basically 10% of the invested amount. It's all right, everyone. Here you can see that we have a lot of videos. Every day there's a new lesson showing how we do this in practice. You see profits, you see break-evens, and you see losses. What matters is this growth, and what matters is that that I always respect my risk management so I don't lose more than I can handle losing. With that, we stay calm, with a clear mind for the next trades. So, this is a practical lesson that we won't get them all right. And for the ones we get wrong, we need to be protected. Okay? And that's what happened here. If you like this educational video, subscribe to the channel, turn on notifications because we have videos like this every day on our channel. God bless you all. Take care. Bye-bye.